Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Fantom, whose current price stands at the $0.2373 mark, and here on TradingView the market is down by 0.25%. And in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot structures and the Fibonacci's. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Fantom chart. So Fantom, from these low prices that we had been trading within, we saw a very nice bounce to the upper side, making it to an all-time high at around the $3.5 mark, in a movement that I'm terming as a higher Elliott wave count 1 to the upper side. And after seeing the all-time high, we had been seeing no prices in this massive ABC corrective structure over here, which has now taken us back to around the $0.16 mark, in a movement that I'm terming as a higher Elliott wave count 2 to the lower side. And after seeing that low in the formation of a higher Elliott wave count 2, whatever we expect next is a bounce to the upper side in the formation of a higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upper side. And giving you a measure from the all-time high, you can see that Fantom is down more than 92%, and that means there are chances that we might have seen the low for this higher Elliott wave count 2 and also the bear market low. But we also need to have in mind that there are still chances of making a new low here on the Fantom chart. We need to have that in mind, but there are chances that we might have seen the low for that second wave, and very soon I'm expecting a very nice bounce to the upper side in the formation of this wave 3. And using a trend based Fibonacci, I can sketch out a minimum target area to the upper side in the formation of that wave 3 to the upper side by connecting the trend based Fibonacci from the low of the first wave down there to the high of the wave 1, then dragging the Fibonacci's to the low of the second wave, and that gives me a minimum target area to the upper side at the Fib level 1.618, and that is at around the $5.87 mark, and that is the minimum that I will expect that wave 3 to the upper side to do in the next bull market, and that is my long-term scenario that I'm expecting to play out. Jumping to the 1 hour chart for further analysis and also give you the short-term scenarios that I'm expecting to play out here on the Fantom chart. Here on the 1 hour chart, you can see that before we made our low at around the $0.016 mark, we had been trading within this channel, and we managed to break out of the channel to the upper side. And in that movement to the upper side, Fantom has been obeying the Elliott wave structures, having that movement to the upper side as the first wave to the upper side. Then we saw a bit of a retracement over here in the formation of a second wave, then saw another bounce to the upper side in the formation of a third wave. Then I'm expecting a bit of a retracement over here in this chart in the formation of a fourth wave before we continue pushing even higher in the formation of that wave 5 to the upper side to complete a higher Elliott wave count 1 to the upper side. And getting a little bit into the details of the formation of this Elliott wave structure, I can first sketch out a minimum target area to the upper side in the formation of this wave 3 using a trend based Fibonacci by connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave, and that gives me a minimum target area in the formation of that wave 3 at the Fib level 1.618, and you can see we fully maximized that target area at the Fib level 1.618 and continued pushing even higher and made it to the Fib level 2.618, and that is where we made our high for that wave 3, and that means we have an extended wave 3 to the upper side. And after seeing the high for this wave 3, whatever I'm expecting next is a bit of a retracement to the lower side in the formation of this wave 4, and using the Fibonacci's to sketch out a minimum retracement area to the lower side in the formation of this wave 4 by connecting the Fibonacci's from the low of the second wave to the high of that wave 3. That gives me a minimum retracement area between the Fib level 0.5 and the Fib level 0.382. That is the Fib level 0.618, and I can mark that target area here on the charts like that, which perfectly lies between the $0.2199 mark and the $0.21 mark, and that is the minimum that I'm expecting this fourth wave to the lower side to do. And once we fully maximize the formation of that wave 4, then we can expect another bounce to the upper side in an impulsive movement in the formation of this wave 5 to fully maximize the formation of that higher Elliott wave count 1 to the upper side. And we have also chart patterns that are supporting that movement to the lower side in the formation of this fourth wave, and that chart pattern is a double top, that is a triple top, because you can see in this movement to the upper side we made our first top right there, then saw a bit of a retracement, made another top, then we saw another retracement over here, then we have made another top, then you can see we have seen a breakout to the lower side, and this is a chart pattern that normally breaks to the lower side, having the target area of the breakout as the height between the tops and the neckline. So using a trend line over here, we can get that height, then place it below the neckline, and that gives me a minimum target area back to around the $0.2154 mark, which perfectly lies within this target area that I have sketched out down here. And that means there are chances that in case we continue pushing even lower, lose the 20-day MA, there are chances of fully maximizing the formation of this fourth wave, then expect another bounce to the upper side in the formation of that fifth wave to the upper side. And if I use the Fibonacci's once more, there are chances that we might not fully maximize this target area that I have shown you over here, because if I use the Fibonacci's connecting them from the second wave to the high of that wave 3, you can see that in this retracement over here we have touched the fib level 0.382, and we are seeing a reaction of the fib level 0.382. that is the area at around the $0.2999 mark, and that means there are chances of seeing further upside. And in that movement you can see we have also managed to break above the 20-day MA. We are trading above it, and that means it is acting as support, and that would mean in case we continue pushing higher, we have the support to continue pushing higher and continue seeing that movement to the upper side in what we can term as that wave 5 to the upper side. So we need to be prepared for those scenarios. We can either continue pushing higher or just continue pushing lower to fully maximize the formation of this wave 4 before we see that bounce to the upper side. And also taking a look at the indicators here on the RSI, on the 1 hour RSI we are trading at around the 59 mark, meaning we have a bit of room for us to support any movements to the upper side before we get into the overbought region. Also taking a look at the MACD, here on the MACD you can see we had printed a bullish crossover here, but we are seeing a bit of a decrease in the buying momentum, and that would mean maybe lower prices are coming our way, and we might be able to fully maximize that red target area that I've sketched out or down here in the formation of that wave 4 before we see that bounce to the upper side in the formation of our wave 5. And I'll keep you updated on any movements that plays out here on the Fantom charts.